Welcome back, everyone. Today, we're diving into an absolute behemoth in the commodity space, Newmont Corporation. Now, throughout this whirlwind month of August 2026, Newmont has been making some major headlines. They are the world's largest gold mining company, and actually, they're the sole gold producer listed in the entire S&P 500 index. So if you want to understand the current state of gold mining, this is absolutely the company you have to look at.
$4,500. That is literally where gold is sitting right now, recently surpassing its highest close in almost 3 months. And Newmont? Well, they're sitting right at the very center of all this action. Thanks to this highly supportive economic environment, Newmont's stock has surged a staggering 24% over just the past month alone. It's been a wild ride.
All right, let's jump right in. Here's our agenda for today's explainer. First, the gold mining giant. Second, Q2 earnings and cash flow. Third, the billion-dollar Barrick deal. Fourth, leadership and market momentum. Fifth, analyst forecasts and targets. And finally, number 6, the bull and bear cases.
Section 1. The gold mining giant, anchoring the S&P 500.
Moving right along to Section 2, Q2 earnings and cash flow, a look inside the ledger. So looking at their Q2 results from late July, it's kind of your classic mixed bag, but one the market generally cheered on. On the top line, revenue came in at $6.12 billion. Now that was up 15.1% year over year, but it actually missed Wall Street's expectation of $6.35 billion. Why? Well, they had a 12.5% drop in gold production. But when we turned to profitability, adjusted earnings per share came in at $2.10, which beat the consensus estimate of $2.05. That is a nearly 47% jump from the same quarter last year, driving net income to a very healthy $2.2 billion.
But here's where things get really exciting. The true standout metric is this massive surge in free cash flow. It jumped from $1.71 billion in Q2 of last year to a record $2.2 billion this year. This phenomenal cash generation has basically allowed Newmont to build an absolute fortress of a balance sheet. They ended the quarter with roughly $9 billion in cash and cash equivalents. That's up nearly 46% year over year, while simultaneously dropping their debt by almost 29%. Talk about a strong foundation, right?
Which brings us to Section 3, the billion-dollar Barrick deal, strategic capital allocation.
Okay, so what exactly do you do when you have a record $9 billion cash hoard? Well, you put it to work strategically. $1.95 billion. That is the staggering figure Newmont agreed to pay within 30 days to definitively resolve months of really bitter disputes with Barrick Corporation over their Nevada gold mines joint venture. Let's break down exactly what Newmont is buying with that massive check.
Honestly, this agreement is a textbook win-win that clears up a major operational cloud hanging over the company. First off, Barrick's 4 Mile project, along with Newmont's Fiberline and Mike developments, are all being rolled right into the joint venture. This formally creates the largest gold mining complex in the entire world. In exchange for that $1.95 billion and rolling in those properties, Newmont officially consents to Barrick's proposed IPO of its North American gold assets. Plus, both sides get modernized governance provisions. Basically, it stops a potentially costly future buy-in and lets both of these giants just get back to focusing on performance.
Now, you might be wondering, why does this matter to investors? Well, Matt Murphy over at BMO Capital kinda hit the nail on the head here. He points out that the price paid for this 38.5% stake in the 4 Mile project is highly accretive. Based on his math, this specific transaction instantly adds over $1 per share to Newmont's net asset value. It's just a brilliant strategic use of capital that flows directly back to the shareholder.
Section 4. Leadership and market momentum. Timelines and top-tier talent. Let's piece this timeline together because tracking these catalysts builds an incredibly compelling narrative of their August momentum. On August 5th, the stock shows major technical strength, breaking well above its 50-day moving average. August 10th brings that massive Barrick settlement we just talked about. Then, on August 19th, a surprise increase in the U.S. Treasury's bond buyback program causes yields to drop and gold to rally. That single macro event sent Newmont shares surging 8.5% in just one day. And then, the very next day, August 20th, they drop a major governance announcement.
That announcement was the appointment of Peter Beaven to the board of directors. And listen, Peter is a real heavyweight in this space. He was the group chief financial officer of BHP from 2015 to 2021. He's going to be serving on Newmont's audit committee. Bringing in someone with his pedigree, especially in global mergers, acquisitions, and capital allocation, is a very, very clear signal to the market. It shows Newmont is deeply committed to top-tier financial discipline and ensuring all that massive cash generation is managed responsibly.
Next up, Section 5, Analyst Forecasts and Targets, Wall Street's Verdict.
So, what is Wall Street saying about all this? Well, looking at the consensus matrix from major firms, the broader sentiment sits at a moderate buy. But look at this average price target across 23 analysts. It's roughly $132.50. Given the stock's recent massive run-up to around $131.58, that average target suggests only a tiny 0.8% upside from current trading levels. Basically, that massive 24% month-long rally means the stock has likely already priced in a lot of this good news.
But, as we know, averages don't tell the whole story, right? Wall Street is actually quite divided on what comes next. On one extreme, you have CIBC's highly bullish target of $170, which is heavily driven by the accretive nature of that Nevada settlement and the macro tailwinds for gold. On the other hand, you have Barclays maintaining a much more conservative target of $124. That actually implies downside risk from where it's trading today.
Section 6. The bull and bear cases, weighing the risks and rewards. It really all comes down to a fine balance. The bull case here is genuinely formidable. Record free cash flow, $9 billion in cash, a direct $1 per share net asset value boost from the Barrick deal, and incredibly strong gold prices sitting above $4,500. But we have to look at the bear case too, and it definitely demands some caution. Remember, they did miss Q2 revenue expectations because of lower production volumes. Also, Newmont has lower leverage to gold price moves compared to its smaller, growth-oriented peers. Add in a recent uptick in insider selling, and metrics suggesting the stock might just be a bit overvalued after its 24% run, well, you've got a recipe for a potential short-term pullback.
Which leaves us with this final critical question to ponder. With the stock trading near its 52-week highs, is the so-called gold standard of mining simply overvalued right now? Or is this newly modernized, cash-rich giant just getting started on its next big leg up? Keep a close eye on how those Q3 production volumes shake out, and whether gold can actually maintain its stronghold above $4,500.
All right, here are all the sources we analyzed to build today's explainer. As always, use this structured breakdown as a launchpad to conduct your own thorough research. So, what do you think? Is Newmont's historic August momentum fully tapped out, or are they just getting started? Keep analyzing the data, and we'll see you in the next explainer.